Let's get to it. Real quick, some housekeeping. Your boy Nick moved to Little Rock, Arkansas, so I'm an Arkansan and Razorback fan now, just so everybody is aware. I went to my first Razorback game on Saturday, and the Razorbacks won. So that's a little personal update for you. Let's get into the meat of the presentation. We're talking about quite a few things today, so there hasn't been a lot of stuff from the top so far as big changes that we need to go over. I always ask everybody to send us ideas for topics for these. If there's something that's really bothering you or that you don't understand that you want us to talk about, we're happy to do that. Nobody has ever taken me up on that. So what we do is Dalton and I get on a call and we talk about the most frequent questions that we get asked. And that's pretty much what you're going to be hearing today is the most common questions and concerns and points of misunderstanding that we see with all of our clients. So today we are going to talk about the new updated Florida Reserve Study requirement. They delayed it. We're going to get into that and what it means for conventional financing. After that, we're going to talk about California for a second. We don't have much to say about that, but there is some confusion that we want to clear up for you. And then the main story of the day is going to be insurance. So everybody is still having a hard time with insurance when it comes to condo projects. Specifically today, Dalton's going to be educating us on Inflation Guard. What is it? How does it work? How do you confirm that a project has it or doesn't have it? We're going to get into the weeds on that. So you should learn quite a few things about insurance today. And then we're going to go over budgets, how you should be approaching a budget and why you should be seeking them out. First things first, the second you see it's a condo deal, try and start getting your hands on the budget. It's going to tell you a lot. We're going to go all over that. And then we're going to do a general market update of just like what is going on in the condo space and in the conventional financing space in general. So without further ado, let's hop in. You might remember this slide. This is an old slide that I copied and pasted. This is from when the Senate Bill 154 first went live. So that has since been changed. Forget everything that you see here. This is kind of a stupid slide. A lot has changed. They have delayed the Florida Reserve Study requirement by 1 year. So just to refresh your memory, the reason this is in here, Florida, for those of you, I know we have a ton of lenders in Florida probably on the call. In Florida, they passed a law that says, we don't trust you to manage the safety of your buildings because your HOA boards are just voting not to do critical repairs and not to fund your reserve accounts. And people didn't want to pay higher HOA dues. Who wants to vote against themselves to pay more money to their HOA? The state of Florida, push came to shove, said you have to get a reserve study done, make sure that your building is in good shape. And if it isn't, you need to have a fully funded reserve account to pay for all of the expenses over the next 20 years. And what that did was it caused a ton of special assessments throughout the state of Florida. Now, I'm just going to go to the next slide so you guys don't get confused. This has been updated via House Bill 913. It was unanimously approved in the Senate and the House and signed into law. It is effective now. This is the law of the land. So we were excited about this, but it really, after we kind of chewed on it for a little bit, it really doesn't change a whole lot of anything other than the fact that the reserve study requirement goes from 12/31 of last year to 12/31 of this year. So it gave HOAs another year to get this performed. And the one key change that really stood out to us is it changed it to 3 or more habitable stories. There's a lot of projects in Florida that use the first story as a parking garage or retail space. This changes it to 3 or more habitable stories. So if you have a 4-story building and the first floor is a parking garage, well, that's still 3 or more habitable stories. But if it's only 2 stories above that parking garage, those projects are exempt. So you don't need to do this whole reserve study type verification process if you're dealing with a first floor as a parking garage or retail space, and then there's only 2 above it. So that takes a little bit of the pressure off the HOAs. What happened here was basically the Florida said, this is the law now, everyone needs a reserve study. And it turns out there weren't enough people to perform the reserve studies. And the majority of condo projects in Florida did not get their reserve study done, whether or not they tried. The engineering companies they can only do so much. And it's the same story for what we're seeing out in California, which we'll get into here in a second. A lot of people, there was a bunch of fuss about this is going to allow condos to use alternative funding methods to fund critical repairs. Doesn't matter. Unfortunately, that's not going to, save condo prices in Florida. That doesn't really make a difference in the eyes of Fannie Mae, which we all know that's really what we care about here at CondoAnalytics is what Fannie Mae cares about. So unfortunately, it doesn't matter where the money is coming from when it comes to doing these critical repairs. If they are unfunded and they need to get a loan or specially assess, if there is an issue that affects the safety, security, and soundness of the building that has not been remediated, it's not an eligible project. It doesn't matter where the money's coming from. So something to keep in mind. That whole allowance for alternative funding methods doesn't really do anything for us, unfortunately. We're still going to have to verify that work is complete if there is some sort of critical repair that affects the safety, soundness, security. These are the three words that you need to remember when it comes to conventional financing. Everything revolves around that, right? So one thing to note about this, and there's a lot of stuff in this bill, so I've sourced it here. You can go see the summary on the Florida Senate page. There's a lot of stuff in there. If you're a condo owner in Florida, I recommend you go and look at it just so you know what's going on. There's a lot of very owner-friendly type stuff in there so far as electronic voting and transparency of documents. It's great for the owners. So far as conventional financing goes, this isn't really going to change a whole lot of anything for us. The reserve study is still going to be required as of 12/31 of 2025. They've got a couple more months to do it. After that date, if they don't have it, they are no longer in compliance. One last thing to mention on this is because the law of the land last year said that it had to be done by the end of 2024, there were a lot of projects that got it. If they have gotten it and gotten it performed, we have to review it, or you, the processor or underwriter, needs to review that reserve study. It doesn't matter that they've delayed the requirement to get them performed. The Fannie Mae regulation is that if a reserve study has been performed or an inspection within the past 3 years, it has to be reviewed. And a lot of these projects already got the reserve study performed. We still have to get it and review it. This is not anything, this whole Florida law has nothing to do with Fannie Mae rules. If a reserve study in any state has been performed in the past 3 years on the project, we have to get it and we have to review it. So unfortunately, this bill is not making our life a whole lot easier. What it does do is it takes a lot of projects in Florida out of non-compliance. The ones that weren't able to get their reserve study done, they are no longer non-compliant with the law, which is good. But yeah, this is a question from the Fannie Mae frequently asked questions. They just released a new version of the Fannie Mae FAQs on project standards. I recommend you go and check it out. But yeah, Fannie says it's acceptable. You're totally okay to get a loan. But if you haven't done the work, we don't really care where the money came from. So unfortunately, that's where we're at with this. The one last thing I want to mention. Oh, sorry, Dalton, go ahead.
Yeah, Nick, I wanted to jump in just really quick. Sorry to cut you off.
No,
Just wanted to mention, I know we throw Fannie Mae out there quite a bit because I know with CPM considered things of that nature, they are kind of the end all be all, it feels like sometimes. But these requirements are applicable to Freddie Mac as well. These are kind of boilerplate requirements at this point. So just wanted to throw that in there just as some supporting info here, just so there's no confusion as to, oh, maybe I can get around this with Freddie Mac or something like that. These are kind of boilerplate requirements at this point as far as repairs and special assessments and, inspections within 3 years, things of that nature.
Thank you, Dalton. So anyway, that's all I wanted to say about that, other than the fact that it is now law that sellers provide a budget to the buyer. So that's something to keep in mind. Just try and get the budget first things first. Dalton's going to tell you all about budgets, but it is now the law that they have to provide it. So just ask for it on the front end. You will thank me later. It gives you a ton of information that gives you a really good starting point for reviewing the project. Moving right along into California. So A little backstory here. There was a balcony and a bunch of people were hanging out on a balcony, and the balcony fell back in 2015 in Berkeley. And after that, as is common, after there's a big tragedy, they pass some sort of law to try and prevent it from happening again. We saw this happen in California, and we have Senate Bill 326 and Senate Bill 721. Dalton, do you want to will you take this one and kind of speak to this?
Absolutely. So I guess just to start, I get one additional note before I start here. We will give you an email address at the end of the presentation here to send any questions to. That way we can make sure we don't miss anyone's questions and can get you a quality response. So I know as we get into the weeds here in the next couple slides, I'm sure there's going to be questions. Just wait until the end of the presentation. You'll get an email address and feel free to send them to us. But without further ado, I'll jump in here. As the first bullet point states, the SB 721 is not applicable to your condo reviews. It's caused some confusion because, as you can see, kind of in the section over here, it has been that particular inspection has been extended to January 1st, 2026. The SB 326 has not. So for your condo reviews, the SB 326 is applicable this year, unless, of course, you have an extension. You know, we have seen some projects that have been approved without that inspection because they filed for the extension and, have until a certain date to provide that. That being the result of, like we see in Florida and stuff like that, whenever they put these inspection requirements into place, there's only so many inspectors out there. Sometimes it can take a little time to get these things done. So there are cases where you might see extensions filed. But other than that, you need to verify that you have this inspection completed as of January 1st, 2025. And basically, this is going to be covering any, exterior elevated elements, such as, balconies, decks, catwalks, anything of that nature. And what I would recommend is, we run across all the time where we have, seller agents, things of that nature that say, oh, this place doesn't have balconies. They don't need this. This should be good to clear, which, oftentimes is not the case. So I would recommend looking at a lot of these projects, especially, a lot of these projects recently have reserve studies within the past 3 years, which are required to obtain anyways. And the reserve study will always tell you if they're required to have this inspection or not. So that's a great place to look to verify that you've met the requirement. Or just go to the project's legal team will be able to provide that response for you as well. There are times when we may not have a reserve study. We can clearly tell from pictures that there are balconies, things of that nature. And we get an attorney letter that says, yes, they are required to have this. They're working on it. Or on the other side, we get an attorney letter that says, no, they are not required to have it. And that's good supporting information as well. But, just to recap really quick, 721 does not pertain to these types of reviews. SB 326 required to be done already this year. Make sure you're asking for it. When you get the SB 326, they're actually really typically easy inspections to review, which is nice. They color code them, which is always nice. So you'll see a lot of times where basically you'll have a green, yellow, or red determination on the inspection. Red obviously being critical, needing immediate repair, cannot be deferred, safety issue type situation. Yellow is typically 1 to 3 years. The repair needs to be done in that time frame. And then green is, no problem at all, basically. So the big thing you're looking for in those cases, or at least what we're looking for when we're looking at these inspections, is that you don't have any repairs that need to be done within the next 12 months as Fannie Freddie require be done. So if you have some repairs that can be deferred out, 1 to 3 years, and you just got the inspection done this year, typically, you're okay to proceed. Assuming those will be, taken care of years down the road. Now, if you had an inspection done in 2023, and you had a repair that needed to be done in the next 2 years or 3 years, we're within the 12-month window now. You need to make sure there's some kind of maintenance plan or repair plan to take care of those items, because Fannie Freddie require, any any kind of repairs of that nature within the next 12 months need to be addressed at that point. So that's kind of what you're going to see with those, and what to keep an eye out for. So Nick, feel free to go ahead and go to the next slide. I think we've covered that one pretty.
Just to reiterate here, stop asking us about Senate Bill 721. It does not apply to condominiums. It is for multifamily apartment buildings like you would find in your downtown, where they have a front office and some sales associate that takes you to tour it. That's what that applies to, not condominiums for conventional financing. So please stop asking us about 721. 326 has not been extended. That's the end of the story on that. So moving right along.
As you can tell, we get a lot of 721 emails. But moving on to,
talk about insurance.
Yes, insurance. Everyone's favorite topic this year. I'm sure everyone is waking up in sweats at night thinking about replacement costs and things of that nature at this point. But we just want to kind of reiterate this is something, we mention it in just about every presentation because it is applicable to every single project review that you do, whether it be a limited review, full review, et cetera. FHA, single unit, whatever it may be. You need to be verifying 100% replacement cost. In an ideal world, you'll get a policy that's guaranteed or extended or says 100% replacement cost right on the policy. And in those cases, easy route to the finish line. You can proceed with that, and you're good to go. What you cannot accept is a policy that just says replacement cost. We get this question. It's one of the most common questions I answer throughout the week. The policy says replacement cost, and you kind of have to dig into that further to say replacement cost based on what? Did they pull a valuation this year? Do they have a replacement cost estimate to provide, a project appraisal to provide? Or is this replacement cost based on something this is a great story. Nick, we just had this the other day. We had a project that had not adjusted. They had been rolling over the same insurance policy since the 80s, which is crazy to think about. But they had been rolling over. So that's kind of what you want to ask in that case. And, those are your options. When you see a replacement cost listed on the policy, you want to verify the agent can either state, hey, a lot of times insurance agents do not offer 100% replacement cost verbiage on the policy itself. So you'd want to go to the agent to say, hey, is this 100%? Can you verify 100% replacement cost? And they'll be able to provide that statement for you to cover the requirement there. Or you'll need to obtain a replacement cost estimate or a project appraisal to compare to the current coverage. So those are kind of your options there that you always need to be going down that checklist of, hey, does the policy state 100% or equivalent? It doesn't. Okay, I need the agent to state that. If they will not, you need to get the replacement cost estimate to verify that that the policy is sufficiently covered. Or at that point, if you can't go down either of those roads, unfortunately, you would be at an ineligible determination there. And oftentimes, just as a note, if you can't get a replacement cost estimate, sometimes there are some areas of the country where agents are not required to provide them and things like that, and you'll get that email a lot. Go through the borrower or go through the seller or borrower if it's a refinance. They should have access to the valuation used to create the policy as part of what they're entitled to through the HOA. So we run into that a lot too, where the agent gives us a lot of pushback. I'm sure a lot of you guys deal with that all the time, pushback from the insurance agents, and a lot of that information can be obtained through the HOA if you do run into that obstacle. So that's kind of your checklist. Again, this is something that has to be verified on every single review. So get used to that checklist and make sure you have sufficient coverage to meet that requirement there. So Nick, feel free to go to the next slide. Inflation guard.
Oh, well, can I say something real quick, Dalton?
Sure, go ahead.
So obviously this is the mortgage business. There's a lot of dum-dums in this business, such as myself, that don't understand how inflation guard works or how to confirm it. So Dalton, will you just explain to us, give us the soup to nuts on inflation guard?
Yes, and to be clear, we're not calling anyone dumb.
Just
There's a
me.
lot of smart people on this call right now. But no, basically, basically, inflation guard is like it says here. It's basically an endorsement that that basically covers the rising cost of materials, construction, etc. If you were to have a claim and needing repairs and things of that nature, if you're in a disaster scenario, your building were to collapse and the wood price has increased has increased, whatever it may be throughout the year, you want that little bit of coverage there. And certainly Fannie Freddie want to see it on the policies here. And basically the reason we bring this up, this is probably beside in tandem, I guess, with replacement costs, the most common thing that we get questions about, the most common thing that we have to follow up on when we get a policy. And luckily, guidance used to be very, very minimal, and it basically said, "Hey, if it's available in the market, you need to have it." But that's not necessarily the case, as there are equivalents in the insurance environment. There's equivalents to this coverage that now guidance luckily has been clarified on a little bit or added to include some of these items. So we kind of wanted to go through some of the inflation guard or equivalent scenarios so that you can keep an eye out for these and hopefully maybe save a loan or two that you would have lost in the past due to them just not having it. So yeah, so basically when you look at your policy there, and I believe our next slide has an example. So we will show you an example. But your policy, will either state that you have inflation guard, um, or it will not, and you'll need to follow up. So basically, what it comes down to is when you get your policy, you either have guaranteed replacement cost or extended replacement cost, which is basically covers that percentage of inflation guard because you've got exceeding 100% replacement cost, or guaranteed, of course, will cover any amount. So those are two options where you would not need it to see it on the policy. So that's something to keep an eye out for. Guaranteed replacement cost is great, of course. And then additionally, you can get additional comments now from the agents that state, if we go back really quick here, that if it is unavailable with the carrier or it is unavailable in the market available to the association, you can get that verification and clear it, because obviously if it's not an offered coverage, there would be no way to obtain it. So they have allowed that option. And then additionally, if they do not have the coverage, again, listed on the policy, and they don't have guaranteed replacement costs, the agent can state that as part of that policy, as part of their process, they review the policy amount annually and automatically increase to 100%. That's the key there. You have to have that verbiage from the agent that says, we review it annually and automatically, as part of that review, increase it to 100% replacement costs, because that's the name of the game, as we've said a couple times now. So those are kind of it's not quite as basic as if you looked in the guidance right now. It says inflation guard, if it's available, you have to have it. It's not that simple. Basically, you have some of these options to go through here to verify that coverage is there. So just to recap really quick, if they have guaranteed replacement costs, extended replacement costs, it's not applicable. If they review it annually and automatically increase to 100%, that would, of course, take care of that, and it would not be applicable. Or if the agent states that it is unavailable with the carrier and unavailable in the market available to the HOA, then you can proceed with that. So just want to make sure you're getting one of those.
To clarify, if that agent says it is unavailable with the carrier, we don't offer it, that's not good enough.
Sure. Yeah. Well said. Yeah. Good point. Yeah. If your particular agency doesn't offer it, but someone down the road does, that is not sufficient. That is available in the market. At that point, they'd either need to add it, or they'd have to, change carriers. In essence, we do run into that sometimes as well. But you'll see this a lot. Florida, especially, my gosh, there's just massive pockets of Florida where the market does not provide this coverage anymore. So you will run into that quite a bit. Yeah, I think Florida is the greatest example. We have a ton of projects in Florida that we use that statement of not available in the market because they just don't offer it down there. And inflation guard is one of those things too, where if for whatever reason, it's one of the first things that projects cut off their policy to save money. I don't know why that's the case necessarily, but that's the number one response of, well, why don't you have it? And they say, oh, well, we decided to not get that endorsement this year to save money on our budget, basically. So something that you will, always need to be looking out for. But I think we've covered it. Nick, if you want to go to the next slide, we'll show you kind of a couple examples of, how you might see it on a policy. The top example, the most convenient example, it'll be, kind of when you get your cert there, you'll see it marked right here. We've got inflation guard, 8%. Great. You can move on down the road. Additionally, a lot of times you will not see it in that area, and you'll see it in the comment section down on the second page of the insurance, which we have down here. Now, this is an example of inflation guard is not included, but the replacement cost coverage is reviewed annually. So this is an example of the verbiage you would want to see. Now, as this is actually this insurance agent in particular, this is their nationwide policy in essence. So we can kind of accept this verbiage in this case. But if you were to get this verification, always make sure you get that 100% replacement cost increase comment. Like I said, this is kind of a universally accepted response from this agency in particular, saying that we review it annually. We always increase it. But if you were just getting an agent comment outside of the cert, you would want to make sure that you have that comment that says reviewed annually, increased to 100%. But this is where you'll see it. You'll either see it, marked here at the top, or you'll see it down in the additional comments stating all these other coverages and things of that nature. So these are just a couple examples of acceptable policies in this case.
Dalton, just to harp on this and reiterate, the big idea here being the project needs to be 100% insured at all times, because we just lived through a lot of inflationary kind of stuff. It has to be insured 100% of the value of the project to rebuild it at all times for it to be Fannie Mae.
Yes.
And you have to verify this, and to clarify, you can confirm this over email with the agent, and you can print that out into a PDF and drag it into your file as proof.
Yes, absolutely. Yeah. Don't be afraid to ask questions. There's no dumb questions when it comes to insurance policies. Insurance agents always assume that everyone knows how to, read insurance. And it's one of the more difficult things these days. And if you need to send someone an email to say, hey, verify this for me, and you need to drop that into your file, we do that daily. That is totally acceptable. There's many times where coverages that do not appear on the policy are present, but just what they've given you doesn't outline it clearly. And you can use those confirmation. And if the agent will confirm it, you can use it. So don't be afraid to ask questions on these policies. We send out a whole template that has all of the requirement questions basically there for them to respond to and things like that. So no dumb questions when it comes to insurance. Get the information you need from the agent. Agent responses are always acceptable to use.
Right. Should we move on?
Yeah, go ahead. I think we've worn inflation guard out enough here. Let's move on to the budgets as this slide shows. Big reason we want to mention the budget. I think if you've been with us on some previous presentations, one of the big questions we get is, what can I do on the front end to kind of verify that this project doesn't have, critical repairs and special assessments and that kind of stuff. And excuse me, my ideal response was always, see if they'll fill out an addendum, because the addendums are required document anyways. And if you get all these questions answered, that gives you a great picture of the project. And certainly it's most recent and things of that nature. But, as is the nature with these projects these days, I'm sure everyone's seeing this a lot. They're trying to make a buck on these docs and this information, and it's coming at a high cost and not always easy to obtain. But the one thing that you should always be able to obtain on the front end is the budget. Every unit owner is entitled to the budget and should have it. And, they should have the most amended one as well. And so we've been recommending recently that if you can on the front end and you're unsure about a project, or you just want to cook it into your process to make sure you can kind of verify a couple things on the front end, the budget is a great place to start. A couple things you can verify with the budget. Are there any special assessments that we need to ask about? You'll see that, assuming it's the most amended one. Even if it's not, still worth noticing. If they have $1 million special assessment, to be dramatic, there might be something that you need to keep an eye out for on this project. You'll see the repairs expenses to see what repairs they're planning for, and you can kind of get an idea there. You can look at the reserves allocation. So you might be able to determine right then, well, we can't go full review here. They have $1 million in dues and they're allocating, $10,000 to reserves. They're not meeting the 10% requirement. So the budget from the unit owner at the time, which should be the most amended budget, can give you a great roadmap of kind of what you may run into during that review process. Is it always going to be a for sure, in concrete, document? Of course not. There's things that have changed. There's things they may have paid off. There's things they may not be, focusing on this year now because they don't need to do these repairs or something of that nature. Or heck, they might have increased the reserves. But at least it gives you an idea of, hey, this project looks really clean, or hey, we might need to temper our expectations here. This is a mess, So that's why we wanted to add this today. Is just to give you an option that you should always be able to obtain at no cost, that can give you a little bit of information about the project. So, Nick, I don't have much else to say on it. You're welcome to go to the next slide.
Okay. Well, I've got a little bit here I want to do on, this is the doom and gloom part of the call. So you'll recognize this slide from our previous presentations, and I want to give a shout out to our YouTube channel at the Commonwealth. Please go subscribe to it if you want to see our presentation on all of this stuff. I'm not going to harp on this today because we've already covered it and it's available on YouTube if you want to learn more about all this stuff. But when this whole reserve study thing went live, we've talked a lot about how this is going to impact the condo market in Florida specifically. That's where, a lot of the condos in this country are in Florida. This problem is not going away. It's still here, and we've got some other stuff we have to tell you about from Fannie Mae. But I want to kind of talk about what's happening in the market and stuff that we're kind of looking at. 30-year mortgage rates hit an 11-month low. I'm curious, if you will, post what you're locking today. I don't know if you're locking 6.28%, but that's what Google told me. If you'll post whatever you're locking today, I'm curious what you guys are quoting. Something we do want to talk about is investor purchases of condos specifically. That's what this graph here kind of shows. If you look at this, you'll see that investor year-over-year growth of investor purchases of condominium units is down 13% versus for single family, it's only down 4%. So investors are certainly buying fewer condos. It's not to say people have just stopped buying investment properties, but they're shying away from condos, which we think is a good thing because that causes all sorts of issues, and Dalton can speak to investor concentrations and transient use and all that good stuff. But it is something kind of odd that we're looking at, or that I think is interesting, of people are not buying as many condos as investment properties. And it's interesting because on one hand, they're a great way to invest money in the sense that you don't have to do anything. You buy the unit and then everything's taken care of by the HOA. It's a low maintenance for the owner or the investor. They don't have to think about a whole lot because everything's being managed by the HOA. What we're seeing, and what I think a huge part of this is like, these costs for all of the stuff to run the projects have gone way up. Insurance, critical repairs, all of these sort of costs of ownership of condos has gone way up. And there's all these, scary stories that I just showed you in that last slide of gigantic special assessments. And investors do not like uncertainty. They want to know exactly what their annual expenses are going to be when they're buying a property. They don't like the fact that at any given moment, the board can just vote to double the dues. That's not really attractive. That's uncertainty, and investors don't like that. So I think that's just kind of an interesting dynamic that I wanted to mention. This is as low as it's been since like outside of when the pandemic started, which was a really weird time. If you forget about that, this is the lowest it's been since like 2011 after the great financial crash. So investors have kind of tapped out of the market, and investors make up about a fifth of the purchases. I think it's like 17 or 18% of purchases of real estate are from mostly mom and pop investors. It's not actually like BlackRock that's buying all this stuff up. Most of it is from just, mom and pop people. And they have kind of tapped out, particularly in the condo space, which, Dalton, do you want to say anything about why we think that's a good thing? We're trying to be optimistic here. So that's a good thing for a lot of reasons. So far as doing condo reviews, if investors in a project and they're doing Airbnbs and nightly rentals, you start to get into the transient use kind of realm, which makes us a little nervous so far as getting conventional financing for all the other units. But Dalton, if you had anything to add to that, please do. Otherwise, I'll move on to the next slide, which is still talking about this stuff.
Yeah, no, that's really all it is. It's just kind of, investor concentration always creates a lot of questions during the review process, certainly for certain review types. And I just kind of in passing had mentioned earlier that, doesn't really affect me that investor concentration is going down. I kind of makes it a little easier in some of these projects, but that's just kind of just a general statement, not necessarily. I'm sure there's some lenders that may be on the call that do a ton of investor, business. And it is nice because sometimes you do have an investor comes in, buys 10 units and, always nice. But whenever I see a project that has 80% investor concentration or something like that, it sends a chill up my spine. So,
all right. Well, last thing on this, single family residence in Florida has 5.6 months of supply versus condos have 10.3 months of supply. I'm not a statistician. I think there's just more condos in Florida than anywhere else, but 10.3 months of supply, that means at the current rate of sales, it would take nearly a year to get every condo off the market. Supply is kind of piling up and we're seeing some price cuts, which is just an interesting sort of thing. Something to keep an eye on because eventually the prices are probably going to come down to a point where a lot of people, it makes sense for them to buy, which is my next slide, which I stole from something called Reventure Consulting. But I thought this was so fascinating of why investors have stopped buying houses. And it's because the cost of capital or of your mortgage rate is now exceeding what you can expect to get so far as a return. So your cap rate, if you're an investor, I'm not an investor. This is what they use to determine whether or not a property is going to cash flow on day one. Is whatever the difference is between their cost of debt and the amount of money that they are bringing in via renting out the property. So because interest rates have gone up so much so quickly, it no longer makes a lot of sense for a lot of investors. Now, that being said, there's a ton of people out there that it makes a ton of sense for, even if they are not cash flow positive on day one. But there's plenty of other reasons why you would want to buy an investment property right now. Don't get me wrong. However, for somebody that's just trying to buy like their first investment property, if you're losing money on day one, a lot of people don't want to make that investment, which means a lot of these people are not doing investment properties right now. Now, there's a ton of other good reasons to buy investment properties. That people do it for all sorts of reasons, capital appreciation. If you're a long-term investor, you don't really care, you're going to refinance later. However, the reason I bring this up is because that 20% of the market that's buying 20% of the homes and condos and whatnot, it's gone down quite a bit. So that's a void which, there's just more supply now. And this is probably going to help drive down prices, which is something that I think we all know needs to happen. But it's too expensive to buy a home in this country right now. But we have good news, which is this is the 10-year. I just clipped this morning. For the year, I mean, we peaked near around 4.8. And we're down to 4.04. So we're down nearly 20%. I think my math's right on that. But rates are coming down. We're hoping that this trend continues. And this is exciting for everybody on the call. I hope that rates are finally, relatively to where they were about a year ago or at the beginning of the year. Rates are trending downwards, which is a great thing. Now, back to the doom and gloom. Enough happy stuff. We have a new Fannie Mae frequently asked question document that they dropped in August, and there's something on here that I just thought was interesting that is kind of a new thing that we haven't talked about before. Dalton, do you want to cover this one, or you want me to do this?
Yeah, I'll cover this one really quickly. Basically, in essence, you need to kind of cook into your process now. Is the HOA planning or going through the process of termination, which is in essence what you're seeing there is basically. I've only seen this just for reference. I have done thousands of project reviews, and I've only seen this once. It's typically really clear when it's happening. Yeah, the unit owners will lose control of the HOA. A lot of times they'll have in their meeting minutes or something of that nature that they've had, a vote for this, because it does require a high majority vote that you go into this process. But basically, is when you've basically initiated the process of terminating the HOA. In essence, this will happen a lot of times when they're going to bulk sell the project to a developer or something of that nature, where they're basically going to start the project from scratch, in essence, turn into a investment type thing or something like that. But basically, you need to be asking that question. Just a verification from the HOA is fine. The questionnaire does not include that question yet. Like the addendum or anything doesn't include that. So if you do have your own questionnaire, but definitely add that. If you're using the Fannie questionnaire or the Freddie questionnaire, you'll need to just ask that additional question. Or like I said, it's usually really clear when it's happening or isn't taking place, and you should be able to kind of make a determination even without necessarily asking it directly. But if you want to be safe, always a good thing to have it on paper. As we always say, Nick, it's all about what you have on paper, not about what you know.
Yeah.
So, but that's kind of what that looks like. And that was released really recently here. So probably maybe something that y'all have not seen yet by chance.
Yeah.
So
kind of spooky. But
and again, though, just to note, it's something. It's quite rare. I'd say probably Florida's. We always Florida's the real hot topic here. It's probably the place you're going to see this because of costs and things of that nature. But it's rare that a project in Nashville, for instance, would be terminating. So just as kind of a note. Friendly reminders really quick. These things aren't going away. This has been on every single presentation we've done for the past year or two at this point. The questionnaire addendum. The questionnaire addendum or equivalent is required on every review. Now, a lot of people may not want to fill out the official addendum form, but you need to be verifying, has there been inspections or reserve study within 3 years? Are there deficiencies in the project, planned or ongoing or planned special assessments, loans, things of that nature? You've got to verify that information. We run into auditors sometimes. Or lenders come to us needing help with orders or loans where an auditor will not even take, even though they've verified that information, if the addendum is not there, they won't even take it. So get those addendum questions answered. It's a huge red flag if they will not answer the addendum questions, whether it be on the official form. We do have success when they won't answer on the actual form, that we just ask the questions in email, and a lot of times they'll answer them. But if they won't answer those questions, huge red flag, and you need to be prepared to do some digging at that point. And then additionally, special assessments. I know this is obviously a very hot topic. Make sure you're going through your checklist with your special assessments. What's the special assessment for? Is it ongoing or planned? If it's ongoing, how many unit owners are greater than 60 days delinquent? That's a separate calculation you need to be making in all cases. And just make sure it's not tied to anything critical. Special assessment to repave your parking lot is not necessarily critical in nature. It's not going to cause a project to be ineligible. So you need to be verifying. I use the roof example as the best example. You need to be verifying the nature of what it's covering if it's covering repairs. a roof replacement to get ahead of the remaining useful life coming to an end, just because your reserve study said, oh, these were put in a couple of years ago, you might want to get these replaced. This is the useful life remaining, and the project goes ahead and says, let's do a special assessment, let's get these replaced, let's not worry about it anymore. That's a lot different than, hey, our roofs are failing, we have water intrusion into all the units, we need to replace these now, we can't afford it. Two very different tales there. So you just need to be asking those questions, make sure you have that information verified. Like I said, those requirements have been here for a while, they're not going anywhere. Make sure you got that checklist cooked into your process.
Excellent. Okay, thank you, Dalton. Next slide here, we're kind of moving into the who are we, what do we do kind of portion of the show here. So obviously we're CondoAnalytics. My name is Nick DeSantis. I think you guys mostly know me, but I know there's a lot of new faces on here. We do all of this as a service for a living. So Dalton Skinner, who you've been listening to all day here, he's our head of condo project review. He's reviewed thousands of condo projects. This is literally all we do. And he runs the day-to-day operation, and my job is to help grow the business. If you want to get set up with us, reach out to info@condoanalytics.com. I'm happy to set you up. It takes 2 seconds. And our service doesn't necessarily need to cost you anything. So if you're having issues with condo loans, come to me, we'll get you set up, and you'll have Dalton on your side signing off on your loans. It doesn't have to cost you anything. You can pass it through in the closing disclosure, and you can just sleep a lot easier. But this is all a bunch of marketing, blah, blah, blah. This is our system when you log in. We don't need a lot of information about the property. You just tell us where it is and what you're trying to do with it, and we will take those instructions and run with it. You can either provide us with all the documents for a discount, or we will go out and source all the documents for you. And that's really nice because you can just be hands off and say, I'm not dealing with the condo piece anymore. I want CondoAnalytics to do it. We do that for hundreds of lenders across the country in all 50 states. So if you want to join us, we would love to have you. We are a subsidiary of a company called the Commonwealth Group. The Commonwealth does all sorts of other businesses like consulting, helping people get their Fannie Freddie approval, or helping them get their FHA approval, all the way down to processing, quality control, and underwriting. And our whole thing here at the Commonwealth is no minimums. You pay for what you need. It is flexible professional staffing for the mortgage space, basically. And here at CondoAnalytics, all we're doing is condo project review. So you put in this information, and we will take it, get all the documents that we need, all of the emails, we'll print them out, save them to PDF. And so you've got notes from lawyers confirming that litigation is not going to bankrupt the project or that it's non-monetary in nature. You'll have comments from insurance agents. We will take all those things and deal with them for you, so you just don't have to worry of whether or not you got the right confirmation on 100% replacement cost or whatever the case may be. If that's not your strong suit, you go do loans, let us deal with the condo project review. This is what our review form looks like. It comes back with all of the supporting documents that any auditor is going to need to see. And this is just an example. I don't know anything about this particular project, but the budget did not meet the 10% reserve allocation. This must have been for a full review, which is, that renders the project ineligible for a full review, obviously. And these are just some screenshots of our form. Basically, it's all the stuff that you need to put into CPM if the project's not yet certified. So we kind of take all of the information from the insurance policy and the litigation and the questionnaire and the structural integrity addendum and the reserve study, and we distill it down into one nice, neat package for you, and on this singular form, so that you have everything in one place and not just 50 documents. But also, our form is only as good as the supporting documents. So all of those other documents are really what you're paying for when you're having us go get this stuff for you. We're only as good as the supporting documents here. It's, as Dalton said, it's not what you know, it's what you can prove. We say that on every call because the name of the game, if you're dealing with Fannie Mae and Freddie Mac, is documentation. So these are just some more screenshots from from our form, it covers litigation, commercial space, monthly, all of this stuff you'll recognize. This is all of the things that Fannie and Freddie need to know. Like I said, we just lay it out for you. So it's all in one place, everything about the insurance. I don't want to spend too much time on this. But
we try to keep it as simple as possible. The form is simple.
simple.
The submission process is simple. We can run with pretty minimal information, as Nick showed you previously, and that's really what we try to do. It's a complicated space. We try to keep it as simple as possible for you. We have a lot of really experienced folks here that know how to get the information we need. Know what's acceptable, what equivalents are acceptable, things of that nature, so we can try to get these things done for you. Unfortunately, that's not always the case, but if there is a way, certainly our team will be able to find it for you.
Yeah, and that, Dalton, unless there was anything else you wanted to talk about, that concludes the presentation. These are the boys. If you want to, these are our email addresses. If you want to reach out, I'm happy to send out fee sheets or examples of the work product if you guys want to get signed up with us. Otherwise, we will see you at the next webinar update. I'm not sure when that will be as of yet, but you will, if you got invited to this, you'll be invited to that as well. I appreciate everybody taking the time after lunch to hop on here and join us. I hope this was good, informative, and educational to you. If you have any feedback, please let me know. I won't get my feelings hurt. And also, if you want us to cover anything in the future, please let us know. If you've got a good idea on some topic that's just really bothering you that you want to hear a whole deep dive into, I would love for somebody to bring something to me, and Dalton and I will put something together for you. So we appreciate y'all. Dalton, did you have anything else?
Nope. Thank you all for joining us. Again, this is one of the biggest groups we've had, so we love seeing that number go up every time. And additionally, if you have any questions, I know I saw a couple come through the chat. Please email Nick, and he'll make sure that it gets over to me, and we'll get it answered for you as quickly as we can to the best of our abilities. So thank you all again for joining us, and we'll see you at the next one.
Thank you, everybody. Have a wonderful fall, and yeah. Thank you. Have a wonderful afternoon, and goodbye.
All righty. Y'all have a good one.